as we go about during this. But I would love to throw it over to exclusive as well right now. We'll get just kind of a quick intro. How you feeling for the market? How was the all day spaces going over the last couple of days? What are we thinking?
Man, can you hear me?
Yep, I hear
Oh,
you.
it says I'm a listener on my screen. That's weird. Um, yeah, no, I mean, this week was, I actually started getting a little bit sick yesterday, so today was kind of rough, but powered through it. But no, the spaces have been really great. I was trying to see if I could, manage everything on top of doing live trading audio, all day, so it's definitely taxing. So, but no, it was a great week. I mean, you had a couple of volatile swings at the opens, and gap downs, gap ups, crazy earnings, crazy non-earnings. I mean, every day was green for me, so I couldn't have asked for a better week. Today was insane. I mean, it was just ridiculous. I think,
It was a weird freaking week. It was. So and I definitely I feel you on this doing spaces all day. Like when I used to watch video game people and whatever do it and streamers, and I would always see them go for like 2 3 hours and then get pretty tired, and I was sitting there like, whatever, it's nothing. But after doing these spaces for all day, sometimes like I see it. I definitely do see it. It is a lot. It's taxing, so definitely deserved and earned the day off. Mostly, we won't keep you on here for too much. We won't be on for hours. The Friday ones tend to go a little bit quicker. We get nice hour and a half, hour 15 concisely. But
nice.
exclusive, I would love to come back to you a little bit, kind of just, I didn't really tell you to come with anything prepared this week. I know you're a super active trader, so you can kind of just spit off the front with what you did for the week. But yeah, how was the week in the market for you? Anything really really stand out to you? Any big winners? Any losers? Maybe I guess too.
Yeah, so I had a on Wednesday I did a Q True Lotto for 396 puts that lost. On Thursday, I purchased. This is right before the market reversed and just absolutely just got demolished. I had some Docu 155 calls, and those, they DocuSign tried to make a small comeback to the golden pocket, rejected, and then just wound up failing. So that was another losing trade. What else? I had two roll-up calls that I think had Apple 180s and Nvidia 320s that it didn't have enough power to come back. But man, today I just didn't even I never look back. If I have a losing trade, I'll just make 10 times more on the next one, which is exactly what we did today. So those would be the only losses I had. So that's four total. My trade of the week was actually done today on Walmart. I got some 140 lotto calls at 3 cents, and those ran a little bit over 4,000% returns. And swings are up too, but I had a couple of trades over 400%, 800%. Microsoft 340 lottos, those went 34 cents to 280. Um, let's see. I actually scalped Microsoft a couple times today. I got a I tried to play the downside on cost on a pullback. I thought there was going to be a little bit more of a pullback, and I had some 530 puts in preparation. Those paid like 60%, and then they reversed and stopped out, so no big deal there. I had Q calls, SPY calls. Both of those paid right around 300% each. Tesla 1005 calls. Those paid about 170%. GM, I got some 62.5 lottos late in the day when that downtrend break was confirmed. So those ran about 440%. So yeah, it was a good day.
Awesome, love it. I kind of want to get through everyone quickly on a little bit of an intro thing, but I'll come back with you a little bit exclusive, dig a little bit more in. Before we get on to the next person, I guess this is the next person. I want to throw it over to my co-host for this amazing FinTwit Friday Spaces. I'm going to throw it over to you, Gav, Wolf Financial. Really whatever you want at the start. If there was any stocks or you were watching, I know you're becoming a better trader by the week. But yeah, any other things kind of throughout the week that caught your eye?
Sure hope I'm becoming a better trader. It was a tough week in the market for me, not going to lie. I had a couple moves that were decent. The one big loss for me was on Docu. Ended up, I think I should have just taken the gain right away because it went green on me in the beginning, and I had like a 10% gain. I should have just gotten out or set a stop loss, but unfortunately rode that down. Playboy worked better for me. I think we talked about that on the space with the street. I did take Playboy calls, and then I sold them at open today when that popped off. So that was a good start. I sold a couple of stocks that I think are just going to continue having, uh, this tax loss harvesting, like Magnite and Robinhood. Pretty done with those. I also did decent on a SoFi call, so I didn't make a ton, but profit is profit, and I got in. I actually bought those pretty far out. I bought them like 2022 April ones, and then I ended up selling them 2 days later because they were up, and I didn't really like how this market was going. So I think that's becoming more of my strategy is a little bit more of the scalping. But yeah, I mean, overall tough week just because obviously my growth portfolio is about 50% crypto. And crypto hasn't really had a great week, obviously falling off in the beginning and not fully recovering. So it had like a down 10% from that. But for the week, yeah, I mean, if it didn't have that giant crypto drop, it might have been a little bit better and the docu, but learning some lessons. I'm not too hard with the crypto. That's definitely a long term hold for me, something that I plan on holding for decades. So not going to stress over that. Glad to have cut down to names that I'm confident in my portfolio and just learning better practices when it comes to different option trading. That's something that's more new to me. So learning to just take the small wins, set those stop losses, go along the lines of that. And yeah, I didn't even really take too much of a look at my Roth or other portfolios this week, kind of just letting them. I don't think that there's going to be like great news in them, unless like they were like heavily weighted to Apple and Tesla, which they aren't. Then everything else kind of went down. I guess Microsoft and a couple others went up, but still plenty on my watch list and setups to watch going into next week, but not forcing anything at all. Not, I didn't like grab any calls at close. I don't know where the market's going to go early next week, so not making too many moves, but just keeping things on my watch list. I have plenty of names that I like, and I'm watching them to see if they can start creating some trends. I think, Richard said it best earlier on our space. It would be great to see growth traverse sideways a bit here. We don't need the pop back immediately. Hopefully they'll stop falling, but just kind of like a sideways trend here throughout the next maybe like 2 weeks would be great to see some stuff build bases, and then we'll have more data. We'll have caught up with some moving averages, and we'll just make moves from there. So that's what's going on for me. Tough, very tough month overall, I would say, in this market, especially with the crypto, with just two bad option trades to be honest. Like the rest of them were all fine, just Tesla trade and a Docu trade. But yeah, hopefully looking for a rebound to come shortly, but plenty of learning lessons.
Awesome, Gob. So I'm going to keep it moving. We're going to get everyone involved at the start, but I'm going to let you know so it's now not on the spot. I want to come back to you. I think this actually will be really useful for everyone up here, for everyone listening as well. I know you said that kind of jokingly, but you are definitely becoming a better trader every single week. I've seen the actually firsthand the work you're putting in the back end. So I would love to maybe get some maybe one thing or one, maybe one lesson you learned this week or one thing that kind of got really hammered home as like, okay, I know I need to do this, or maybe it was a new thing you saw, but just kind of somewhere, something along those lines to educate the people who are kind of in a similar pathway as you and what routes you're taking. So I would love to maybe get on with that once we come back to you. But with that, I'm going to throw it over to Brad. Kind of similar question, starting out. How was the market for you? How was the week? I know you were talking about CrowdStrike a little bit earlier. I would love to maybe get into that a little bit later, but just in general, how was the week for you?
Yeah, so I take, just to start off, a pretty different approach than our other talented speakers, and I say this a lot. I want to emphasize different, not better or worse. Just I take an approach of long term investing that highlights my personality a little bit better and works for me. So I'm invested almost exclusively in high growth, volatile disruptors, the same ones that have been getting shellacked over the last few weeks. But to me personally, because I invest in companies with a mean beta, with an average beta so high over the S&P 5, or so far over the S&P 500, I do like to leave a pretty elevated cash position. So as we kind of see this extreme multiple compression after we've had such a fun time, I don't want to be insensitive to other people who are maybe struggling, but it's almost exciting to me for lack of a better term. So I mean, companies, I'll give two examples like Olo and Lemonade, companies that I absolutely love that have traded at ridiculous multiples since they went public. And I have owned small stakes in both of them since they went public, but have to emphasize small because I wasn't comfortable being anywhere near building out a full position in these companies at 40 times sales for Olo and like 80 times sales for Lemonade. But I mean, with the time they've had to grow into their shoes and all this turbulence we've had, I'm finally now able to really lean into these positions and build out these positions now that forward multiples have come down, but the growth CAGRs that have been expected have actually come up. So the risk reward for me is just becoming a lot more enticing. And for that reason, I've gone, and this is going to sound very slow and turtle-like to a lot of people, but it's actually very quickly for me. I've gone from almost 17% cash a few weeks ago to now I'm a little bit over 14% cash. So a large move for me, for sure. 3% in a few weeks is something that I really haven't done since March 2020. So it's been a very active couple of weeks for me. And I also want to highlight one more thing. I'm adding as pain and volatility and turbulence intensify. So when we get days earlier in the week where ARK K is up 6% and everything is really, really fun, I'm just kind of holding on to what I have, and I'm not accumulating on days like that. I'm accumulating really almost kind of counterintuitively when some of the technical signals break, and I'm doing so extremely slowly. I'm not trying to time any bottoms, just putting a few basis points of cash to work as the technical signals kind of improve and strengthen, so that when sentiment and momentum and all these things we focus on a more day-to-day basis kind of turn like they always do, if the last 100+ years are any indication, I'll have a lot larger stakes in very healthy companies that Mr. Market is now ready to appreciate the way that I think they should be appreciated. So and by the way, I'll be wrong sometimes too, but for me it's way more about slugging percentage than batting average. When I'm right, I have to be really right, because when you're investing in these disruptors like I am, I'm going to be wrong sometimes, and that's just inevitable. But that's really what I've been doing the last couple of weeks. Why I've been doing it. It's nerve wracking and it's exciting at the exact same time, which to me are pretty similar emotions. But just very much so sticking to the plan, and sticking to the plan that I created when things were really good, and not all of a sudden trying to abruptly change my approach and my strategy because stocks stopped going up in a straight line. Because that happened and because multiples are compressing, it is now time for me to lean in, and that's what I've been doing.
Love it. We'll dig in a little bit more. I think me and you do kind of invest along similar principles. We do invest in different types of companies, but I think a lot of people do get it twisted when they're investing. We'll say that they're so stressing on what you buy, which, don't get me wrong, what you buy is very, very important, but it's a percentage of the whole pie. When you buy it, how much you buy, what you do when you buy, other stuff that you can do while you're holding it to extend gains like selling calls and selling puts. There's so much you can do, but picking stocks is a small section of it that gets highlighted way too much. It's important, but it's not everything. But with that, Brad, I would love to dig in a little bit deeper once we get around the first full list of people. I'm going to throw it over to Gavin, who we have joining up here with us. Me and you have spent so much time on Spaces this week. I more or less do know how your week was in the market, but give us the
Yes,
intro.
sup
How we
guys? I will
feeling,
go
Gary?
through that thing. Most
Go
of you
for
guys
it.
know, right? I said 2 weeks back, December, I'm adding nothing to my long-term portfolio. I do the same thing. The place I'm confident in, I am still holding them. But this week, I only posted 2 trades. I think Gav is in there. I think Gav, right? Did you see them? No.
Yeah, I'm in there.
Yeah. So I only posted I played Lucid calls and I posted about Apple calls. So Lucid, I played the bounce back after the subpoena. I did lose 6% on that trade, but the next trade I posted was Apple calls, the 170 strike, and Apple skyrocketed to this. So how much are those up right now? So right now those are up almost 290%. So it's so funny to see people panicking while the SPY is up almost 3% on the week. It makes no sense. But like we talked about in the morning, right? Apple, Microsoft, Google, Tesla, Nvidia, These 5 names are carrying the SPY and QQQ. And in QQQ, majority of the names are down almost 30% from the all-time high. So I can see how people are a bit stressed with that. But for the flow, right, this week, Apple was the play. And the flow in the last half an hour was very, very bullish. So I do expect Apple to run again next week. So keep an eye out. And the names which are down, I think 40-50% on the year from January. I do expect after the 15th of December for them, the selling to start for tax lock harvest, right? Because people want to wait as long as they can, and they have to wait a month to buy them back. So 15th is the perfect date, right? You sell on 15th December, and you can buy them back on the 16th of January. That's my plan. Everything I own is hedged. I'm not adding any new long-term positions. I will add them on the first week of January, and I'm enjoying my next 3 weeks.
Has there been anything in the past week or so that you found, just quickly, because I think I don't know if Stock Talk's here yet. Send me an emote if you are Stock
I
Talk.
am.
Okay, perfect. Yes, we'll keep this quick, Gerg, and we'll get it to everyone at the intro. Is there anything that's kind of tempted you to buy in? Has there
But
been
yeah,
anything that you're
so
like,
far,
ooh,
I think so far broke on the $15. I think on Tuesday,
okay,
but it
perfect.
didn't buy,
Gerg,
right? I like
well, yeah,
so
finish what
far,
you're saying.
even Palantir, right? Like Palantir, I would be buying head over first under $20, but that doesn't. But I think I
Cool.
bought Palantir. It's the only thing I bought at $19. Nothing else this month, and I have no plans. Like even AI, right? I was long AI. I bought that I think 45, and yesterday it went to 40. I took my losses for that, covered that. So I'm covering all my positions whenever they pop, right? And I will buy that back in January because this stock is down 80% and I was down 4 or 5%. But I do expect people to start selling that, so I'll cover that.
Perfect. All right, some good topics for me to come back on and dig a little bit more into in a second. And then the last but 100% certainly not least, we have Stock Talk Weekly up here. I know he's had a fun day doing some stuff outside the stock market. I don't know if he's going to share anything with that though, but yeah, man,
No, yo,
how was your
keep
week in the
it
market?
PG-13, please. Talk. The kids there. You, you can't mention that here.
No, it wasn't anything like that. I've just been at the bank all day dealing with insurance garbage and
Too much money
mortgages and
from
things like that.
SPACs.
No, hey, that helps. But
They're like, sir, you can't deposit 20 million into your safe deposit box.
Did you
no,
buy
it
the
was
bank
just
stock talk? Did you buy a
huh?
small bank?
What'd you say?
Did you buy the bank?
No, I didn't. No. It was just Bank of America's annoying. So I mean, I have one of my mortgages is with Bank of America, and there was just a complication with all states supposed to send them Texas windstorm insurance, and they didn't, and yada yada yada. I mean, I don't want to bore you all with the details of that, but I've been at the bank all day dealing with that, so I just got back home. For me, last couple weeks have been really like a tale of two different stories. I mean, it's been the start of this week was excellent for me. Coming into Friday last week, for people who follow me, if you have notifications on, if you have my replies on, you would have seen this. But last Friday I closed out a lot of the puts I had on individual names in the indices. It was a really good week to be in puts last week, and so Friday I got out of a lot of those, expecting a rebound headed into this week. Obviously, Monday and Tuesday, we got a very aggressive rebound, not only in the indices, but in a lot of individual stocks. Leo, I'm going to take that away from you. Hold on, give me a second. But yeah, we had rebounds in a lot of individual names and the indices earlier this week. It was a really good week to be in calls on individual names Monday and Tuesday. That paid really well for me. I was in IonQ calls and a couple other names that paid really, really well Monday and Tuesday this week. I took the square calls headed for that 195 level. Once we tested it and we're kind of hesitating around there, I got out of most of those, which ended up being a great decision because, Square and a bunch of the other growth names traded down for the rest of the week. For me, it's my long-term positions were, getting smacked this week, to be frank. But, my trading account fared a lot better because I've been prioritizing cash on my trading account. over the last several weeks. And, while I want to be net long as often as I can, I don't really trust the way the indices are working right now, not only because we don't have a definitive trend, in the indexes with regard to, an upward or downward trend. I don't feel like we have a definitive trend yet. And, I feel like the market's really sentiment driven at this juncture. We're really, the market's gravitating around narratives and, the Omicron variant and policy changes. And, in a sentiment driven market like that, I don't think you can trust setups as much as you can where you have a definite trend. Even the best technical setups in the world can break down with a shift in sentiment. And we saw a lot of that this week headed into the CPI data today. I think yesterday's reaction was kind of an anticipatory reaction to today's CPI data being a big miss. Obviously, today's data was in line, so that's good, I guess. Better than a big miss. But I was hoping it would be a bit lower. I expected earlier this year, obviously my prediction was wrong, but I expected earlier this year that coming into November and December, we would see CPI start tapering off, which would have given a little bit more room to some of these multiples to either drive a bit higher or at least stay where they are. But that wasn't the case. I would have liked to see CPI closer to like 6.2 or 6.3. Obviously, that didn't happen. Hopefully, January, February starts to see that cool off. I'm still a firm believer that not that inflation is transitory, but that there are key macroeconomic issues that are going to really taper inflation going into 2022 and 2023, largely being, supply chain issues, which I anticipate will be resolved, and also, the supply versus demand curve, which I think is going to really steepen. And, I think both of those things are going to help with inflationary pressures overall. Obviously, I could be wrong or I could be early, but I really do think that going into January, February, March of next year, we're going to see those numbers start to come down as there's more of a broader reopening. But not only that, some of these supply chain bottlenecks get resolved because it's really a matter of time. Supply chain bottlenecks never last because it's in the financial interests of corporations and governments to resolve them. It's just really a matter of how long they last. And so coming into next year, I'm pretty bullish from the inflation side. There is a risk, an overhead risk with regard to interest rates and, assessing how baked in that reaction really is. I've talked about tapering versus inflation before. If you look historically at the data, typically the market reacts more steeply to tapering than it does to interest rates. And largely the reason for that is, people who understand macroeconomics understand that once tapering comes to an end, or once it gets close to an end, the next step is the increase of interest rates. And so knowing that, typically over the course of tapering, whether it's over the course of 5 months or 8 months, you see that reaction start to pan out. And then by the time you get to the juncture of interest rates, people are like, all right, we've already rotated, in accordance with this in advance. And so I think you might have a bit of that. I still see downside and multiple compression coming when we do see an interest rate increase, but I think a lot of the reaction will be baked in by that point. Um, I tweeted today too, kind of near the close, that I feel like activity has been disjointed between the indexes and individual stocks, especially growth and tech stocks. And while that is, more surprising and at a steeper level than I've seen before, it is also kind of expected because, if you understand the time value of money and you understand interest rates and tapering, when the cost of money increases in the present, then the names that suffer the most are the names that are depending on their future cash flows to justify their valuations, right? And so most of these growth and tech names are depending on forward cash flows of 5, 6, 7, sometimes 10 years, depending on the industry you're looking at, to justify their valuations. And coming into these policy headwinds that we're inevitably going to face next year, I think you see that trend continue to a degree. And I think there's going to be relief. There's going to be weeks of relief where growth names and tech names rally. And if you're nimble and you're able to capitalize on calls and equity in those situations, you can make a lot of money. But if you're just sitting around and waiting, this isn't, to me, a market where buy and holders will thrive or make a ton of money. I'm typically a swing trader, and I've spent most of my career swing trading. I've made most of my money swing trading, but I also have the wherewithal to understand that, like, I want to adapt to different market conditions. And for the last 3 months, I mean, even people who follow me have seen, like, I haven't been putting out a new pick every day. I haven't been putting out, a new stock I like every day. It's been a handful of stocks that I play over and over again when the themes are hot. And I've just been using volume analysis to kind of judge where I think volume is going to go, what sectors are going to run for the week, what themes are going to run for the week. And I haven't been doing it in a complicated way. I've simply been looking at 1 week, 1 month, and 3 month trends in volume, picking 6 names. I like to pick 6 because then you get 2 large caps, 2 mid caps, 2 small caps. Picking those 6 names in a variety of sectors, looking at the volume inflows or outflows over a 1 week, 1 month, and 3 month period, and it really, really gives you a sophisticated view of where money is moving. I've enjoyed doing that, and it's worked very well from my trading account perspective. On my investing account, which I manage entirely differently, it's been a brutal week because coming into the end of this week, I gave back a lot of the gains that I had on those positions from earlier in this week. But granted, I don't manage that account that way. I manage that account very similarly to how Brad manages his account, which is, with an investor's hat on, and not really too concerned about the short term volatility on the names that I'm invested in. Those are names like Square, Tesla, those kind of names. I'm not worried about the intraday volatility as much. But yeah, that's kind of what I've been doing in a nutshell. I'm going to continue to look at volume going into the next week. I really do think that one thing that was interesting for me, which we've seen this trend before, but the relationship between Bitcoin and the inflationary narrative has been very interesting to me this year. I think coming into the first CPI disappointment this year, we actually saw Bitcoin rally on the first CPI disappointment. And then every CPI disappointment from there, it didn't. It actually traded down. And, so that to me shows that Bitcoin is not performing as an inflationary hedge. It's actually performing as a speculative asset. And for people who've traded Bitcoin and NASDAQ stocks or tech stocks going into earlier this year and even last year, Bitcoin was kind of corresponding with those speculative names, with those growth and tech names. And so I find that to be you know, a bad thing for Bitcoin in a way, especially in the short term. But because the narrative is that, hey, if inflation is going up, people see Bitcoin as a alternative to fiat and the common store of value thesis. I don't think that's the case right now. I think people, especially individual investors, even institutional investors or whales, are viewing Bitcoin as a risk asset, and they're disposing of it the same way they are disposing of these growth and tech names in the face of inflationary pressure. So that's an interesting theme that I think is worth watching going into next year and seeing if that narrative changes. If inflation continues to steepen next year, which I don't think it will, but if it does, that would be an interesting thing to watch as well on the crypto side. And so, yeah, that's just in a nutshell what I'm watching. I mean, I can go on over a few different names, but I don't want to take up too much time.
Yeah, we'll throw it around a little. I do love the topics there, and I honestly brought Jay up because I do feel like the inflation topic and everything in that area is kind of in his wheelhouse and in his realm. So I'm going to throw it over to him in 1 second, just kind of setting the scene and giving some context for everyone else about what the last 30, 45 minutes of this is going to look like. I'm definitely going to go back to each of our speakers at least once. Brad, I would love to kind of dig a little bit deeper into one specific name. I know we were talking a little bit about CrowdStrike earlier. I know he mentioned Lemonade and Olo as well as two that he was buying this week. So we'll definitely get a deep dive or a deeper thought into one of those names. We're definitely gonna, we have a master trader. We have a couple master traders in here, but we can't leave exclusive. Have a space with him and not throw some tickers to him. So maybe we'll get Gav to throw him a couple tickers. We're gonna get that lesson from Gav. That he did one thing that he learned this week, and then we're just gonna dig in a little bit deeper on everything else. Maybe we have a meme or two to discuss from Gurgavin this week that he made, the lucid one, which I thought was pretty funny. We could dig in a little bit deeper about that. But before we get to all that, I'm gonna throw it back over to Jay. Stock talk. I feel like kind of knowingly or unknowingly led us right into your wheelhouse. So I would love to maybe get your thoughts on the market, the week as a whole. But inflation, I think, is something that's a key word today, especially, but in general recently.
Hey, thanks. Appreciate it. So, we came into this week with a short covering rally across the market on the institutional side, which was justified for three reasons. We had China easing, did a 50 bips RR cut. We saw Omicron, and I posted a bunch of charts. South African hospitalizations are nowhere near what they were with Delta. And then we saw the debt ceiling pass. So those are three soft catalysts that drove the short covering rally. And I was very cautious on Monday and Tuesday saying, hey, this is all great news. I'm happy that we rallied, but we have CPI on Friday and we have the Fed next week. 70% of the market is still institutional. Let's not get ahead of ourselves. So I used those rallies as opportunities to cut risk. I cut almost all of the D-SPAC risk I had, except for boxed. And I started just going into catalyst-driven type trades. For example, APSG last week is a SPAC with a warrant where you could have tracked pretty easily the Qs on SEC Edgar. The Q3 expense ratio was multiples of the Q2 expense ratio, which meant that there was likely a deal to be announced soon. So they announced the deal with Certares portfolio company, Amex Global Travel, which is a recovery play, and that was like a 35% pop in warrants. So I think like this is the environment where you have inflation, you have uncertainty, you get rewarded for sniping and doing the deep dives. Like 1 or 2 weeks of work on something, trying to figure out, is there a catalyst? Is there a merger going to happen? Is there a spinoff? Is there a split off? Is there something going to happen with warrants or preferreds? Is there going to be a share buyback? So those are things that I've spent time on. But when you think about inflation going forward, there is a high likelihood that it has peaked or it will peak soon. And they're mixed indicators, right? So on one hand, you saw lumber limit up. I haven't seen lumber limit up, on the futures exchange in 6 months. So we're at a 6-month, local high. We're seeing oil it's down, but now it's kind of steady around 70. And as we approach driving season in March, April, May, that could easily go up back to 80, 90. We're looking at copper's base metals. Once China did its easing of the RRR, people expect more easing from China, and they hinted at it. So base level commodities are coming back up. So I think next month inflation will be lower than November. Every inflation period looks at the 30 days prior. So next month is going to look at this month. This month's going to be weak because of the Omicron scare. But I think that January, February might be higher than December. That doesn't mean that we haven't peaked. It just means that this is going to be a volatile market where next month might be a little bit dovish. The following month might be a little bit more hawkish. But we only have a week until the Federal Reserve on December 15th. And the data that Powell is going to be using is twofold. One, inflation is at 40-year highs at 6.8%. And the Republicans are going to give him flack for that because of the infrastructure bill that was just passed. And on the other hand, unemployment's at 4.2%. And yes, the labor force is smaller, but 4.2% is the lowest we've seen. If you look at graphs of unemployment, it's extremely low. So I think he will have no choice but to say we're going to taper. And yes, part of that is priced in. However, if he doubles the taper, which means 30 billion a month, that means we end tapering by March and we enter QT, quantitative tightening. Quantitative tightening is what actually will put pressure on the market after March, and it really depends on, is he going to raise rates between April and June and raise rates 2 or 3 times next year? So that is what you need to keep an eye on. And what does that mean? Late cycle companies like banks might do better next year. If you look at the EM Cloud Index, which is EMCLOUD, you can look it up free on the web, also on Bloomberg. It's down about 22, 23% just over last month. But it includes good companies like Adobe and PayPal. If you strip those out, it's actually down, like these SaaS tech names, mid caps, they're down like 30, 40%. Now they've tripled from the pandemic, which no one talks about. Everyone's like, oh, they're down so much. Well, guess what? If you're in them, I'm happy for you. You made 300%. Now they're down, 30, 40%. You should have trimmed on the way up. So I think we're going to see a lot of volatility. Tech companies are great. There will be some great tech buys next year. in the second half of the year. I think the first half of the year, financials and late cycle companies are set to outperform. And guess what? I even think cash will outperform in certain months. So I think I'm going to cut it off short, but I think that event-driven plays, SPACs, catalysts, spinoffs, cash boxes, merger arb, that type of stuff will outperform. But I think people have been seeing this volatility is here to stay, and we might get a Santa Claus reality potentially after December 15th if Powell kind of just gives up a little bit and is a little bit more dovish. You never want to be too confident, but if that doesn't happen, this might be the first year without a Santa Claus reality. Or the last 25 of the last 27 have been positive. This might be one of the two. We might have 3 out of 28 that are not positive.
Gotcha, Jay. I always appreciate you coming up here and giving your insights. Love having you on here. Feel free to chill out, stay up here. Love the insights, and yeah, thank you again. But we're gonna keep it moving from there. Step back. Make sure you're following all the speakers that we have up here. We're not. This is a panel that we got up here that only gives the best information. We're not pulling up random people. These are people who are on the market every single day. When they're traders, these are full-time traders. The investors up here are putting in work, doing the due diligence every single second of the day. So maybe not every second, but most waking hours of the day. But so
These
sure
guys don't
all of them out,
eat,
give
they
them a
don't
follow.
sleep, they just invest all day.
We're up 18 hours a day, and I know Exclusive is working all around the time finding ideas. And just quickly on trading, this is a trader's market, not an investing market. And for example, with CFVI NAVSPAC, I've literally done 12 round trips. 12 round trips for 110% return without using options when it's only at a 13 handle today. So if you trade and you find interesting opportunities, it can be a better risk reward than investing in this market.
Yeah,
Definitely a sentiment that's going across. Yeah, sorry.
No, I was just gonna say, speaking of trading all day, so you're slowly turning into the trading. You can see actually Jay, his profile picture, that's actually him. He's just really a computer. There is no man behind it, just a trading rig.
You just got to take your emotion out of it. And as long as you don't size too big, you don't have the emotion there. You just keep going in and out.
No,
That
be a
was a perfect
That's what she
psychopath.
said.
No
Be a
emotion. The
psychopath with
computer.
no emotions. You're the best trader, I think.
All right, I love it. Let's. I'll bring it back a little bit. Gav, I'm going to throw it back over to you. Ask a little bit about the lesson that you took from this week, if you were able to find one. I'm going to have 3 things for you here, dude. In between, let's sandwich it with a calendar, a quick Google calendar, because we can't do a full spaces without giving the people what we know they want and need. And then throw it back over to Exclusive if you have a couple tickers that you wanted to chart and look at.
Yeah, sure. I'll go over the calendar first. And we'll make this quick because we believe it is the most powerful tool when it comes to Twitter Spaces. And that is if you want to know when all of our spaces are going to be. So the 3 of us up here as the hosts, Stock Market News, myself, Stock Talk Weekly, we have collabed and uploaded all of our spaces throughout the week to a single public Google Calendar. And if you want to be on it, all you have to do is DM myself or Stock Market News, the host, shoot us your email, and we'll add you right to it. That way, you'll know when all these spaces are going to be. You'll see things like we already have Stock Market or Stock Talk Weekly stock picking space every Sunday at 8 on there. We have this space on there. We have a 12 p.m. EST on Fridays on there. We have our 9:20 a.m. on Mondays. And then as other random spaces pop up, and let's say you're interested in crypto or NFTs or technical analysis or live trading, you won't be out of the loop. You'll see those. They'll pop right onto your calendar, and you'll go, oh, I know this is happening now. Let me make sure I'm ready. Let me make sure I'm sitting at my trading rig or whatever it is that you're doing. Once more, make sure email is in the DM. Send it to us, and we'll have you on there typically within 24 hours. I just think it's an incredibly powerful tool, and there's already 1,500 plus people on it, including people who work at Twitter who love our spaces, so they know that it's working. So if you're not already on it, again, just shoot us a DM. We'd love to see those come in. When it comes to the lesson, my takeaway from this week was just you need to know when you're going to sell when you place that trade and to take the small wins. That was my biggest takeaway. I had 2 trades that started out green. I could have gotten out 5-10%, and I lost like 100% on both of them, option trades. And it was just because I just didn't have that conviction of, hey, here's where I'm going to sell. Or if it falls to this level, I'm going to sell. And I just kind of continued to ride on hope, which is not a strategy. And instead, what I should have done is either set a stop loss. I should have gotten out right away when they were at 5 to 10%. There were a lot of alternatives that didn't involve losing that money. And, it just has now been ingrained into me. Like when I get in, I need to practice proper risk management and also do my homework really before going in. And I think that starts out with not just trying to find, the trades on the run, but actually for a few days watching setups, watching charts, seeing how the stock moves. Oh, does it set up on the Anchored View app and the 50-day moving average and the volume shelf? And now where does it go from there? And not just jumping in, but really doing that homework in advance because there were ones that I did that worked fine. Like Playboy, really liked the setup, liked where we're sitting with its moving averages, the volume and everything. And that one worked out. But others went down the drain. So it was just a risk management idea and a knowingness of when I'm going to sell and when I'm going to get out because I'm not riding here on hope. I'm not rich enough to do that. And then if you want me to throw some tickers to exclusive, I can.
I mean, I can, but I feel like we've had too much of my voice on the spaces, and in
Not
general, I want to hear your voice more. So I would love to get a couple tickers, and I feel like you really fit that role of talking to, throwing out these tickers and being the host extraordinaire on that route. So we'd love to have you do it if you want to.
I got to say, man, though, you're killing it today. Stock market news has been on fire today. Everybody, make sure if you're not already, stock market news, the GOAT of FinTwit over here, putting out every single day like 60 different tweets that are just packed full of information. If you want news quick, you go to his page. If you want the best spaces, you go to his page. You want the connections, you go to his page. Unusual Whales tweeted about him this morning. Okay, like this guy, if you're not already following stock market news, like look how fast he's freaking growing. And it's all for a reason. 140K today. Boom. That was like up 1,000 this week, maybe more. So, or 2,000. I don't know. Make sure you're following him, regardless. Okay. With that being said, I can throw a couple of tickers real quick over to exclusive, and maybe we'll just look at some setups going into next week. So here, I'll just throw, let's say, like 2 or 3 at you exclusive because I don't want to take too much time in the show, and then we can keep it rolling. So one of them that I'll throw over at you is going to be SOXL. And this is basically like if you want mega bull leverage to semiconductors for everybody, that's SOXL. And then I'll also throw, let's go, here's an oldie but a goodie that we've been talking about that I think I kind of like the setup, XPDI. So that's one of the stocks off weeklies. So we'll do SOXL, XPDI, and third name would be Airbnb because I kind of like how that's coming up too. So those would be my 3.
Okay. All right. So SOXL. I think SOXL has room possibly to pull back slightly before it moves back to the high, I'd say 71. So I would say be wary of a pullback to the 8 and 21 EMA daily. Let's see, we've got some fib expansions that are, it looks like it rejected so far the 2.618 expansion. Let's see. And if it pulls back to the 2, that's at 62.93, which obviously would take some time, but you've got some levels of support right now. So far it's held the 80 EMA daily, and I would say if it fails to hold that and have an outside day, then you'd probably be looking to move to the 21. But again, that's not an extremely volatile move that you get on the SOXL. So I would say in general, it's not as volatile as you would expect most names to be. What was the other one?
Second one was going to be that's XPDI.
Power and digital infrastructure.
Yep.
So it looks like it found some support on the weekly 30 moving average. It looks like after hours it's reclaiming the weekly 21 EMA. So, I mean, there's not a ton of history on this one yet, but you've also got a monthly candle close that it's coming up to, right at, let's see, 1250. So, and I'm also looking at the monthly now too. It looks like it touched the 8 moving exponential moving average on the monthly almost to the penny. So that's going to be strong support. And of course, that was a newly developed exponential moving average. So a lot of people were going to be looking for that too. Daily, I would say if you're looking for an area either to the downside or the upside, let's see. I would say wait for 1173 to the upside, 1096 to the downside. Those would be my confirmation levels for a move either way.
Okay, and
And
then
then
we'll
you
do
said Airbnb?
yeah, we'll just do that one as a third one. I don't want to take too much in this segment, but I know that's a popular name that got thrown around a lot.
Yeah. Or let's see. So Airbnb, I actually posted I think Wednesday about Airbnb, and it looks like it rejected. I'll pin that to the Twitter space, but it looks like it rejected the golden pocket, and that's why we saw the move back to the downside. And it looks like it closed right above the 21 EMA daily, and right below the I'm sorry, right above the 8 EMA daily, and right below the 21 EMA daily. So it's right now it's wedged between some pretty strong resistance and support. So it's kind of and it held the 50 MA daily. So I would say look for the 50 daily moving average as support. But Airbnb, it's one of those names that it looks like it's going to go down and then it continues going up. If I'm pulling up some standard indicators like RSI, MACD, stuff like that. The RSI is really cool. It's not overbought, it's not oversold, it's right in the middle at 49.65. The MACD is about to turn green, so you're going to wait. Maybe Tuesday is when you start seeing the MACD traders, because I know a lot of people that wait for a MACD to go green or red double bars before they get into a trade. So Tuesday and Wednesday might be the area to make a move on Airbnb. Golden Pocket's at 182.34.
Awesome stuff. Thank you, Exclusive.
Yep.
Perfect. I'm going to steal one more in there and throw one more at you, Exclusive. Roku, I actually
Yeah.
saw it on your page a couple days ago, had quite a crazy turnaround this week. I would love to hear your thoughts on that one.
I mean, yeah, that was a lot. I think a lot of people made money on Roku, but I think more importantly, a lot of people were chasing and opening up unnecessary risks to their portfolios. Because some of the levels. Okay, so for instance, I'll give you an example. So on Wednesday, I had 250 Roku calls that I purchased on an average of 550 a contract. Somebody was buying them from me at $17 at the very, very top when Roku was just ripping and tearing. And, the 260 roll-ups and 265 call roll-ups and 270s all paid. But the fact that people were buying them at the top means that the risk management in the market is still, in general, not being monitored like it should be. So I think, Roku. I think I got off topic there for a second, but Roku closed at a decent support above it. So I wouldn't say it's bearish. I would say expect some consolidation going into next week before a definitive move in either direction. But if anything, I would say if it fails to hold above the 80 MA daily, we can see a move to the downside because there is some room. But right now, levels of support you can use, other than the 8 EMA daily, you can use 223.34, and if it can reclaim 231.50, we can see a move back to 239.65.
Perfect exclusive. Thank you, man. It wasn't really off topic at all. I love hearing the first-hand experiences of what really you think of when we say these stocks and what's really been happening for you this week and everyone in
Yeah.
general. So I
Well,
love it.
the first thing I think about is how much it paid me. That's the first thing that goes through my mind. And then, after that, I think of, where is the high option flow because, I'm starting to get the hang of using option flow while I'm trading, and I can see how some people can catch moves that normally you wouldn't catch by just watching charts and candles and technical setups or fundamental analysis or using macros and so there is an edge to having option flow at your disposal, but I think it's a tool that you add to everything else. You can't just 100% rely on it because the moves they're just an afterthought. Like I see my own trades pop up on those alert feeds, and then I actually got called out on Wednesday when I was trading with the women panel. They're like, I just saw your order, and I was just like, well, let me spread those out a little bit. But yeah, I
So
think they're great tools. What's that?
that's hilarious that they were able to pick up on it. The tools, I wish I had these tools when I was a kid. It's just
Oh
phenomenal.
yeah.
I 100% agree with you. They should be used in addition to fundamental work, not, as a way to just trade on your own.
Yeah, I like to refer to it as one-dimensional trading. Like you've got to have multiple avenues of knowledge. And if you're just, I think Stock Talk Weekly talks about this a lot too. If you're just set in your own ways on one particular way, it's going to be a choppy ride on your portfolio. It's going to go red to green, red to green. So I like it just being green.
Well, having my trade show up on those options trackers is no concern of mine, so I'm nowhere near that. But love to hear it. Love to hear it. Thank you, exclusive. Love having you on this stuff. We're going to be chilling up here for a little bit longer. Definitely chill up here for at least the wrap ups as well. Make sure you're following exclusive. Make sure you're following all the speakers that we have up here. With that, I'm going to keep it rolling. Throw it over to Brad, stock market nerd. I would love to get a little bit of a deep dive, maybe, or whatever, however we want about it, about one of your stocks. I know you were talking about a couple of them earlier. It doesn't really have to be that one if you have one prepared.
Sure. I could talk about CrowdStrike. That was my most recent earnings report, and they've had a couple interesting investor conferences since then. Does that work, or do you want me to pick a different one?
Perfect.
CrowdStrike earnings or Riot?
Sorry, say that one more time.
I said, give us CrowdStrike analysis or Riot.
Okay, yeah, or we storm the
No,
Capitol. Yeah, for
forget
sure.
that. Let's go with AMC. How about that?
Okay, yeah, AMC is actually my second favorite. No, I'm just kidding. Yeah, AMC is a little bit outside of my let's just call it circle of competence. I'll go with that. But yeah, I don't want to hate on AMC because I know
Oh, you
some
like
people are
GME
passionate
then?
about it.
Okay, I get you. GME up.
Okay, sounds good. I will after. But CrowdStrike, yeah, another really strong quarter. I guess the number everyone focuses on is the revenue, which grew by 63%, 4% beat. But what I was really excited about is that the RPO, so remaining performance obligations, and the demand backlog actually grew by 81 and 111% respectively. So that just shows that forward demand is not slowing down at all and is speeding up. If anything, sequential revenue accelerated, or sequential demand, every single sequential demand metric pretty much accelerated quarter over quarter. The other really encouraging thing, and why I like platforms so much, is that their module adoption continues to be fantastic. So percentage of clients with 6+ modules went from 29 to 32% sequentially. 5 and 4 similarly large upticks, and then we got commentary from the CFO Bert Podbear saying that they're going to stop disclosing 4, 5, and 6 and start disclosing 5, 6, and 7 next quarter, and then eventually 6, 7, and 8, because module adoption and uptick has been so strong. And why that's important to me and why I focus on it so strong, why I focus on it so strictly, is that with these platforms, after you onboard one module, you don't pay, or you have no additional, or virtually no additional operating costs to onboard additional modules for your client. So this module adoption trend is definitely a good tell, or a good hint for more module adoption to come, because the incremental margin on the second, third, fourth, and fifth module and so forth is higher than on module one. But kind of moving on to margins and the effect of that cause. I mean, their non-GAAP operating income beat by 46%, non-GAAP net income beat by 64%. So really strong across the board. The one number some people picked on, I think they added about 1,607 customers this quarter, and like 1,660 last quarter. But on an investor call later in the week, the CFO again, Bert Podbear, told us this was solely a matter of their deal size increasing and their upselling increasing. So their ARR sequential increase actually accelerated, which is just a sign of him not talking out of his ass, but that actually being the case. Some other more qualitative highlights. George Kurtz, the CEO, founder, if you know him, you know he's very charismatic. He likes to talk about wins, and this quarter was certainly no exception. So he really highlighted wins over the newly public SentinelOne, which is their most formidable competition for sure. I would think either them or Palo Alto, but I think SentinelOne is safe to say. But CrowdStrike displaced one of the largest hospital systems in the U.S. That's after or displaced SentinelOne as a client, and that's after last quarter doing so with a Fortune 100 company. And Kurt said this was based on unfulfilled promises. Just within months of a multi-year contract, the hospital system realized it failed to scale or maintain efficacy and drove considerable friction. And I want to just add a little bit of context to this because I do think SentinelOne is a great company. I haven't really dug in on the multiples or the stock very much, but I have dug in on the product, and it is the most formidable competition for CrowdStrike. But the thing that we have to keep in mind is that it's fantastic at protecting endpoints in small use cases, in smaller use cases for SMB clients, and it doesn't really scale and doesn't have effective enough data compression to be the Fortune 500 or Fortune 100 go-to like CrowdStrike has really turned itself into. So I don't think that this is a matter of one or the other winning. I think they're both going to do extremely well in this tide that's lifting all boats. But I do think that CrowdStrike's focus on the enterprise is why their gross margin is so much better at this point in time. And for the amount of ARR or sequential ARR that they're adding every single quarter, their growth rate really is not that much slower than SentinelOne, and they're at far broader scale. And they were both founded within a year of each other. So just an interesting point to keep in mind. The other really important highlight was that CrowdStrike was named as a major platform partner for the Cybersecurity and Infrastructure Security Agency, so CISA. This is to augment Joe Biden's, I'm not going to talk about politics, but his executive order on endpoint detection and response, so EDR, which basically just threw a lot of funding at this space for augmenting the federal systems. And so CISA worked with several federal agencies to arrive at this decision. They went through CrowdStrike and all of their competitors, and they picked CrowdStrike. The quote that we got that I was very encouraged by was that Bert, the CFO, again told us that this is going to, or the federal government, this now means that that's going to become one of their largest clients, which means that, and we've had no ARR contribution from them so far to date, which means that's all going to be an incremental contribution going forward. So really, they really officially got their foot in the door for the federal government. They've had some FedRAMP success, but this was the most notable win for them, and it's all forward-looking, which is extremely encouraging. They also highlighted some accolades that were kind of interesting, but nothing super notable. Humio, which is their data log management acquisition, which they paid 50 times sales for, so it better be doing amazingly, is doing amazingly. They continue to add large clients. They continue to integrate Humio services into CrowdStrike's XDR, that's Extended Detection and Response program, to use this log management feature that Humio is built to allow CrowdStrike to seamlessly onboard third-party data to really extend, that's why it's called Extended Detection and Response, to extend EDR beyond the endpoint into the rest of the security stack. So Humio is really doing exactly what they want it to do. Rule of 40 score is at 77. That becomes 96 when you calculate it using their free cash flow margin. Their magic number, which is essentially which is net new subscription revenue times 4 divided by sales and marketing expense. And it really goes to show if they put a dollar in their growth engine for sales and marketing, how much does that churn out? And right now it's at about $1.30. It was at $1.40 last quarter. Their goal is to get that down as close to 1 as possible. And being 30% above 1 just hints at them having a lot more room to continue to accelerate spend. Fortress balance sheet, $2 billion in cash and cash equivalents, extremely cash flow positive. a lot more market share to take, a lot more low-hanging fruit, displacing not only the legacy Symantec contracts and all those with McAfee, but also a lot of displacements with SentinelOne, which I'm finding very encouraging. So that was CrowdStrike. The stock really tanked afterwards, but it's one of those high growth disruptors. It's in that bucket that's really not in favor right now. So as it becomes less and less and less in favor, and right now it's at about a 70 times forward free cash flow multiple, growing over 50% top line safely next year. So really not ridiculous, not cheap by any stretch of the imagination, but it's not at 70 times sales anymore. It's at 70 times cash flow. So things getting more reasonable there from a forward multiple perspective, and that's just making me more and more eager to accumulate. I haven't done so yet because it really did. It has had a very fun ride from the IPO just a couple of years ago. So I'm being very patient on waiting for pullbacks, and 70 times cash flow still isn't cheap. But it's starting to get to that point where I am ready to begin accumulating and destroying my cost basis once more. So yeah, that was the report. 2 thumbs up from me as always with this company. They are an under promise and over deliver machine, and this quarter was no different.
I love the companies that under promise then over deliver. There's not that many of them. Everyone likes to build the hype, and a lot of companies don't reach that hype. Some do. Some build the hype and reach it, but there's nothing like some companies that continuously understate, and then just when they report the numbers, smash it. I do love that. I am a big fan of that. So talking about this, you talked a little bit there for a second. But that it's maybe getting close. But what do you envision, or what do you think would have to happen for you to want to start accumulating again? Is it just a time thing? Is it a price? Is it a whatever? But yeah, is there something specific you're looking for?
So I would have to pull here 1 second. I'm going to pull up the chart real quick. I do, believe it or not, I do use technical signals to kind of guide my adding sometimes. But yeah, it looks like somewhere around 175 looks pretty interesting to me, and then which is where I would add, and then below that maybe 123 and then 101. So I'm not saying that's going to happen. Please don't take that as me saying that's going to happen. I'm just telling you those are really the areas where I see bounces in support and volume that I would really look to aggressively lean in. But yeah, I'm not predicting that. Just saying those are the 3 areas that are looking enticing to me.
I was actually short player from 190 to 166. I think it's a wonderful company. I think it's a great management team. It was just the cheapest short I could get from an options perspective on the sector, and I covered because it's at 140 now. I wish I held it, but I covered around 166. First 180, and then I covered more at 170, then 166 because I was worried that it is a good company. The only thing that I think is still an overhang is that it's still, I know you're saying 70 times cash flow, but still 70 times cash flow, 50 times sales. It is still like consensus is it's growing at 35% a year for the next 3 or 4 years. Is that enough? Right, in this type of environment to warrant that type of multiple, and are there other opportunities to park cash? I think there will be a time to buy all these, and I think that Brad knows this one very intimately, and I respect his analysis. It's very difficult to hop in, even using technicals. I don't know if that's going to do it. I think you actually need capitulation in the sector, and then evaluate the sector again. These are wonderful companies. There's a reason why they're up 300% during the pandemic, but I think many of them, people went over their skis and levered up. And I was just on an options thing with Data Warrior. Data Warrior, one of the guys and I love him, one of the guys on his panel, not him, was like, hey, I just loaded up. My account is like 40% leaps on this tech stock. And I was like, dude, like that only works for in the last 18 months. And it hasn't worked for the last 6. It is not something you can do for the rest of your life. You can't just leverage up your portfolio 3x using leaps and just hodl forever. I mean, that's how you blow up. And I think, all the options activity that was going for Tesla, Tesla was a huge gamma squeeze over 2 years. Love Elon, love the company, but just look at what happened. It was a massive gamma squeeze. People couldn't afford to buy shares. They're just buying options. Same thing's happening to Apple now. And there's just so much money in the system. People are just grasping at the best companies and buying them. And that strategy only works until it stops. And I'm worried about that. And I think that there's still going to be a ton of volatility here. I would love to buy Cloudflare. I don't know what, right? No one's smart enough to know exactly when, but I don't feel capitulation yet.
So you're saying Cloudflare is 50 times sales, right? Because CrowdStrike at a $45 billion
Sorry.
EV.
Yep, no, it's different. But
Yeah,
yep,
we're at like
Cloudflare
20.
is the one that's short.
Yeah, we're at like 22 times forward sales, which again, I mean, but based on their cash flow margin, that's where I got to roughly 70 times forward. And again, agreed, not expensive, but with these forward estimates, they've been wrong for the last 3 years. So I mean, CrowdStrike, one of the points that from Value makes a lot that I've really I've come to kind of borrow and adopt is that these revenue beats compound. So CrowdStrike beats top line by 4, 5, 6% every single quarter. And those beats compound upon each other to lift this forward guidance, which has been happening consistently for the last few years. So I'd be surprised if the projected CAGR through 2024 wasn't beaten pretty handsomely. But we'll have to see. And again, I have to agree that 70 times cash flow is not. I mean, in no market is cheap, even if a 10-year tops at it at 2%. But I don't think it's ridiculous anymore for a company that's expanding margins pretty briskly and growing pretty quickly at this point in time, and so much greenfield opportunity ahead of them, especially in cloud workloads. But respect your opinion as always, and thank you for giving it. I think you made a lot of great points.
Thanks, Brad. Sorry for that I misspoke a little bit, but just a quick ticker. The last comment: Everbridge, EVBG, SaaS company today. If you pull up the ticker, you won't believe what happened. I mean, the company lowered its sales guidance by 2%, from 25% to 23%. This is $160 multi-billion-dollar stock, closed at 63. It's at 120 at the beginning of the week. The CEO was forced to resign for bringing down guidance 2%. Like, that is how out of whack things were for this company. You know, like 400 million of sales, it was a $6 billion cap, and now it's 2. It's just phenomenal. Like, these are good businesses. It's just phenomenal how crazy some of these companies have acted. Everbridge, EVBG. So the valuation does matter. 6 months ago, no one believed me. It does matter.
All right, Jay, we're going into wrap-ups right now anyway. You kind of gave us the first part on your thoughts. Any other place that we could check you out? Any other thing you got going? I would love to hear that now, too. Anything you're watching next week as well?
Yeah, sure. I'm watching ESSC. It's been a gamma squeeze candidate with a NAV floor of 1026. It's a SPAC that bought JHD, extended. The extension date went to February 24th. In return for the extension, they allowed shareholders to redeem. Those redemptions were over 10 million shares. It was left with 3.3. There's a backstop from Glazer, which is a $5 billion SPAC ARB fund, and 2 other parties that they've locked up their shares of 3 million. So there's like 20,000 open interest. I'm not looking at my computer. Very high open interest on the 12.5s. I do think, with OPEX next week, things could get a little bit nutty. No one has a crystal ball, but it's a gamma squeeze candidate. I'm also looking at a bunch of NAV specs. I know Ivan, it's something Stock Talk Weekly looks at as well. To DCRC, you have 1% downside at 1010. You're buying something like that, so you're not going to see 30% move in a week. You might see 5-10% move in a week, but that's alpha. You're buying something with 1% downside, and then have a set of 5 new warrants. I've been monitoring all the 10Qs for expense increases, at specialistresearch.com, and I'm looking at, I sold CVS. CVS was a win for us it was a very simple thesis. It was that there's going to be more traffic in the stores because of vaccinations, and Aetna's going to do better. They merged with Aetna, and it produces, 10 billion of free cash flow. It announced a $10 billion buyback, recently, crushed earnings. And, we recently published a model on Zim, which is a shipping company, that it trades at like 1.5 times earnings, and it is over earning right now, but you have to understand how long the shipping issue is going to take and how long, these companies are chartering at higher day rates as well. So it's an interesting name. It's going to pay out like $12 in dividends. on a $55 stock. That one's interesting. And a bunch of guys have been asking about recovery names. They do have some recovery names. Dufry has underperformed because of Omicron. So people have asked me, it's not as liquid as they want. So to put together a dashboard on 9 different airlines, looking at capacity utilization, PRASM, how valuations have looked over time. So airlines, there's going to be a full dashboard that I'll talk about next week.
Perfect, Jay. Thank you so much. Love having you on these spaces. As always, make sure you check out Jay, give him a follow. Make sure you follow all the other speakers we have up here. Amazing, amazing panel of speakers. So I said that about 7 times speakers as well, but we're going to keep it moving. As a part of this wrap-up segment, myself and Gav are just going to give you a minute or two on our newsletters for the week. Mine's going to be a little bit different than his. Gav is going to take you a little bit of wrap-up and release his newsletter. I'm going to give you guys a little bit of a preview. So what's happening here, for any of you guys don't know, Bullish Rippers, the green raccoon that is up here, that is my account that kind of goes along with the newsletter. So make sure you're following that. But I'm putting some changes into this newsletter. I've been doing Twitter for almost 2 years now, which is kind of scary. And I feel like I've become an expert at it, but the newsletter thing is pretty new for me. So I'm still changing around the formats. The format that we have coming out tomorrow is going to be like a week in review. I tweet 600 times a week, which is crazy. No sane person can keep up with that. So I'm going to be doing a little bit of a recap, kind of getting you the most important stories, the biggest movers, a heat map, some other large news stories, and we're just going to expand from there. So I'm really excited for this. I'm going to post it to my Twitter tomorrow. Can follow the Green Raccoon. But with that, I'm going to throw it over to Gav to give you a little bit on his newsletter.
Awesome. Thank you so much, Evan. So, yeah, I'm also a Twitter freak, kind of like Evan. And I basically spend like 40 hours a week on here. That's a lie. More like 50. And it is my whole life. So I was wanting to write a newsletter, but I'm not one for long form content. And I was like, how can I take what I'm doing all day and bring it to people? So what I did is I started basically just bookmarking all the best tweets that stood out to me. I was like, that's really good. And so now I write this newsletter. It's like a 3-minute read each week because I don't want to clog up anyone's inbox. Once a week, Fridays, market close, you get it. And it basically comes through and it highlights the top 10 tweets of the week from finance Twitter. It's 3 of the best stock analysis type ones. It's 3 of the ones that are in relation to humor and finance humor, and then 4 just all around 5-star tweets. A lot of awesome people, made this week. And I'm trying to really mix it up, bring different people, not always people that I'm following. Hilariously this week, actually, so I tried to highlight a tweet from this guy, Greg Harmon, who's a professor that is like big on here and tweets a lot. And I tweeted yesterday that I was going to highlight his tweet, and he blocked me. So I don't know what's up with that. But without that being said, the rest of them I thought were awesome. We got Genevieve on here. Stock Talk Weekly always has good stuff that I end up. Oliver Kell, U.S. investing champion. Ramp Capital, Doug, and a bunch of others all make this. So I just tweeted it out from my page. So if you go, you'll see it's my top tweet. You can see inside. I tweeted out from the Wolf page, actually. I run both the pages up here, the Wolf page and this page that you can see. So I tweeted out from the Wolf page. And if you go to the Wolf bio, you'll be able to see that you can easily subscribe with one tap. And yeah, I think for people that are looking for like a very low maintenance, I don't want to spend all day on Twitter, but I want to get the best of the best tweets, this is for you. And if you also just want me to add you to it, feel free to just DM me your email as well if that's the easiest thing for you. I'll add you, but the easiest way is just going into that Wolf bio and tapping on it. But big shout out to Evan for putting this together. The Bullish Rippers newsletter is awesome as well. Make sure you're checking it out. They do a ton of stuff with us, and I'm excited to see the changes that he makes to it.
Yeah, I'm excited for it too, and I actually am just realizing this now. I forgot to hit record on the spaces. I got the ability where I'm doing it. Perfect. So we're going to have the space recorded. I believe I have someone in here as well recording it for myself as well. Bullish. We got a bunch of places it's going to be going up. Keep it moving. Make sure you do check out that newsletter. I just pinned it up at the top if you want to read through Gob's. Great read, very quick, low maintenance. Keeping it moving. Stock Talk Weekly. And Gavin, I want to give you guys the chance to go first in this wrap-up session. We didn't hear that much from you guys, and honestly, that's a travesty. Any space is made better when both of you guys are talking. I'm going to throw it over to you, Stock Talk Weekly. Love to get your kind of wrap-up on the week. Feel free to go a little bit longer if there's anything itching at you that you want to talk on, but the floor is yours. Oh, and tell us what you got coming Monday or Tuesday.
Yeah, so I'm going to put a tweet out on that. So for those of you that reserved a spot for our premium group that is going to be launched on Monday, most likely, potentially Tuesday, but most likely Monday. I've put together a team of traders I respect and that I think can offer a lot. For those of you that know Pete Doom, who's no longer on Twitter, he's going to be exclusively in our premium Discord as well, providing charts, daily trade ideas, swing trades. So for those of you who've been on Twitter for a while that know Pete Doom, he's one of my trading mentors as well, and really good guy and provides a lot of education. So he'll be in there. Anthony Einhorn will be in there for those of you who are fans of SPACs. He's a young killer that's been growing super, super fast. I mean, I think he went from a couple hundred followers to 25,000 in like a month and a half. He's going to be in there as our chief of SPACs. We're going to have Penny Check for those of you who follow him and know him. He's going to be in there for asymmetrical RR. We're going to have Evan here. Stock Market News is our chief of news, and we're going to have Mass Trades and TSDR trading in there as our heads of day trade. So I've put together this team of traders that I know and respect and admire, and I know that they have the wherewithal to provide good ideas. I'll obviously be in there as well, providing, fundamentally driven ideas, peer value trades, the typical ideas that you see on my page. Will be on there as well. So that's coming Monday or Tuesday. But self promo aside, this week has been interesting. Like I said, it was a tale of two stories for me. And, there was, it was a week where I learned some lessons as well. Coming out of last week, like I said, I closed most of my put positions on individual stocks and the indexes on Friday of last week and made the mistake of not adding those puts and hedges back on Monday and Tuesday of this week when a lot of them were a lot cheaper considering that everything was ripping. So, you learn something every day and, nobody's strategy is perfect and there's always, executional mistakes that you make. As much as I have been trading for a while and I like to consider myself pretty nimble in my ability to navigate and continue to hedge and move from position to position. I made the mistake of not adding those individual stock hedges back on Monday and Tuesday because I covered them all last week. And so that was something that just kind of registered to me. And I was like, look, hey, next time I close out my puts and we have a couple ripper days, I'm going to be adding those back. So yeah, just, always learning and always adapting my strategy. I can encourage everybody to do that. I think all of us up here and, Exclusive spoke on this and Jay spoke on this as well about being nimble and, being able to adapt. If you're a new trader and you come into these spaces and you're listening to, some of us full-time traders who have been doing this for 5, 6, 7, 8, 9, 10 plus years, if we are telling you guys that we do that and that we constantly adapt our strategies and that we're constantly changing and that we're constantly learning, if you're not doing that and you're a newer trader or an inexperienced trader, that should speak to you that you're not putting in the work. And, I'm not knocking anyone by saying that. I just really feel like most of the newer traders that don't find success because they're not willing to apply themselves in the way that they think is necessary. Because too many people, especially on Twitter, believe that they don't have to put in the work, because FinTwit has become this massive machine of idea generation that it's created this notion, especially for newer traders, that they can follow 10 or 15 pro traders and again, I don't see any problem with using FinTwit as a scanner, but the notion that you can follow 10 or 15 pro traders and just spoon feed their ideas and that you'll be successful, I mean, that's just not true. And the reason it's not true is because of execution, right? Like even there are traders who will give you every entry and every exit. But even with those traders, the in between and the management of the trade, the sizing of the trade, the sizing of their trade relative to the rest of their portfolio, how they scale in, how they scale out. There's so many aspects to a trade, that it's impossible to spoon feed consistently for a long period of time. In a hot market, it might work very well. Last year it worked for a lot of people. There are, newer traders last year who did, 1,200, 1,300% on their account for the year. And, they fall under this bias and this ego that, oh, wow, it's my first year of trading and I murdered it. I must be able to do better in other climates. But the reality is that when the market's not just face ripping and everything's not just going straight up, you have to be nimble and you have to be creative with your strategy and your capital allocation. And you have to explore things like selling covered calls, cash secured puts, use, I'm not saying, over leverage on optionality, but, be flexible in regard to the way you expose yourself, what you're buying, the types of stocks you're buying. I firmly believe that, I say this all the time, every single fundamental trader should be more technically savvy, and every single technical trader should be more fundamentally savvy. And that doesn't mean that you have to, have a 5-page thesis on every trade you take. I think that's another misperception that people get when I say that. They think, oh, well, technical trading has worked for me for years. I don't need to know about the balance sheet. I don't need to know about the fundamentals. Sure, but you should still be fundamentally aware. You should still understand, because the reality is you can have a great technical setup and a great technical trade. And if you're not aware of the fundamentals can ruin the trade in and of itself. Because if the stock gets overextended, gets to an unreasonable market cap, or if there's something that goes on internally in the company that causes selling pressure, that can destroy a good technical setup. And on the same side, if you're a fundamentally savvy trader and you use that to drive your decision making, your entire trade can become soured purely due to a technical aspect. Maybe you entered at the wrong point. Maybe you had a terrible entry. You entered right in between a resistance and a support, or you entered right while it was testing a major resistance, and then it gets rejected, and then you're bag holding. Like, not being fundamentally aware if you're a technical trader, and not being technically aware if you're a fundamental trader, I think are some of the biggest mistakes that people make. And you don't have to even hand it, right? You don't have to be 50% technicals or 50% fundamentals. But I firmly believe that in the long term, if you want to do this for 10, 15, 20 years of the rest of your life, you have to be aware of both schools of thought, at least aware, at the very least, if not educated. So stay nimble, keep adapting, be open-minded, be willing to trade different asset classes, different equities, use different strategies, use optionality. Some people want to trade equity outright, whatever it is, just continue to adapt and continue to move forward. As regard to my outlooks on the market, I think today's reaction was more so baked in yesterday than it was today. Today wasn't as steep of a downside day as we saw yesterday. I think yesterday was just anticipatory selling in reaction to CPI. Going into next week, I'd be watching the Fed on Wednesday. I think that's going to be pretty important to direct sentiment. But kind of what I said earlier, sometimes you have sentiment-driven markets and sometimes you don't. And this one is really, really strongly sentiment-dependent. And, it's kind of dictating the moves and everything, right? Like, there have been moments where the indexes were set up for a run, and then, the Omicron variant or whatever tanked them. And then, there have been other instances where the indices were set up to tank, and then, some good news caused them to rally. So, be focused on the news. I always tell people, like, news is really much more of a convincing dictation than anything else, any kind of analysis you can do, because that's what spurs sentiment and that's what spurs reaction. The market is, at the end of the day, just millions of independent decision makers who think differently, who sell at different points, who sell for different reasons, who hold different stocks. And so even the funds, right, like outside of the algos, that's also independent decision makers at the end of the day. So keep that in mind and just understand that you're not going to ever be right 100% of the time. And knowing that, in the meanwhile, you should hedge and manage your risk, because, every single trader up here has lost trades. Every single trader I know loses trades, not just once a year, but regularly, right? People are wrong on trades all the time. And if you're wrong on trades at any time, whether it's once a week or once a month or once a year, you want to control your losses when you are wrong. You don't want to be wrong and then be really fucking wrong and be down 40, 50, 60% of the position. You want to be wrong, take a knife wound, and move on. So be willing to shelf your ego. Be willing to admit you're wrong, which is really the crux of the issue for many new traders, is this inability to accept that they were simply wrong on a trade idea, and that they should cut it and move on and not just hold it endlessly, in this perpetual conviction. And there's nothing wrong with being convicted. If you're convicted in a position, yeah, you can size it more heavily. If you have a really good fundamental or technical or both thesis on it, you can rely on that and sleep easier at night. But in most cases, risk management, awareness, and flexibility are the three things that are going to allow you to keep doing this for an extended period of time. And some of you may not want to, but for those of you who do want to do this for an extended period of time, you have to be flexible, you have to manage your risk, and you have to be willing to learn every day. Because I've been doing this for 10 years, I still learn something new every week. And there's still, every week, I make a mistake where I think, wow, I should have known better. But that just helps me reinforce my strategy, reinforce my plan, reinforce my discipline. And, I think it makes me a better trader every single week that I learn those lessons. So, like I said, this week it was me taking off my hedges and not re-adding them when I should have. And yeah, so just be willing to continue learning is I guess what I'm going to say. I kind of got a little off topic there, but be willing to continue learning and keep tuning into these spaces if they're educational to you. Keep following the right people. There's a lot of wrong people to follow too, but continue to filter your feed and digest who's posting what and why they're posting it. Don't fall into these traps where you follow somebody for a long period of time and then you end up trusting them by virtue of them having made, great decisions in the past. No trader's always right. And so keep holding the people accountable, not just yourself, hold the people you follow accountable. And I don't mean by that to comment on their posts and say you suck. I mean, hold them accountable from the perspective of continue to analyze people's ideas. If you are the kind of person that uses Twitter as a scanner, continue to analyze people's ideas and, make the assessment, hey, are they making the right decisions in this climate? There are traders who are fantastic in one market environment, but can't do shit in a different market environment. So, be aware of that and be willing to filter your feed that way. I've gone through following hundreds of different people that I've then unfollowed and followed others and replaced. And I use Twitter as a scanner, but that's also because I know what I'm doing. And so for some of you that don't know what you're doing, I see a lot of you getting caught up in this blind, desire to gain ideas from other people. Great example of that yesterday was Pair, where people got slaughtered, right? Coming into the open, they expected this to gap up because it was a high redemption SPAC. And the people who didn't know what they were talking about were tweeting, hey, it has an 800,000 float. This thing is going to go up 6, 7, 800%. That was the narrative that was being put out there. But what they didn't know was that there were 22 million shares available to sell from existing shareholders. So the stock gapped up at open on hype, stalled, and then gapped down all the way from 14 to I think today it was trading at 7. So the people who bought at 13 and
I mean, you should
14
never
yesterday
say
got absolutely slaughtered. And so,
you should never say something can go up 600, 700,
yeah, whenever people
800%
say that
anyway.
in
If someone
general, that's
says
a bad
that,
sign.
just unfollow
Yeah,
them. It's kind of
if somebody's tweeting something
ridiculous.
to you and saying
Like,
this is
Hey,
going to go
don't
up
unfollow
7
me,
or
guys. Don't
800%,
unfollow me.
they're probably full of shit.
no,
But
not options, but in comments, if someone just comes up and tells you, "Oh, this is going to
I
be up 600-700% in like a week," that's
I think
absolutely ridiculous.
I've been trading for about 10 years and I've never seen anything other than like GME, AMC, and DWAC. Those are the only 3 times I've ever seen it, and that was all just pump
or
bullshit.
yeah, exactly. It was
And in the pre-market, when things were liquid, it went to 18, like it doubled, and then it sold off 60% within 12 hours. Like you have to avoid. I think the guy was like, some kid who was stock up, him. He was saying ridiculous stuff. Hadn't read the SEC filings. The day before, we had sent an email with the actual snapshot from the document saying, "Hey, this lockup doesn't make sense. We cover 600 of these names. There's a transfer agreement here, and it's loose." And the people who didn't read that, the next day who followed this, I'm not going to name the guy, ended up losing their shirts.
It's the thing. Just be careful who you trust, and at the same time, being careful who you trust is also about trusting yourself. Too many of you don't know how to trade independently. I'm going to sound like a broken record when I say this. If you are not sure that you know how to trade, and I know that might sound odd, but I mean that. If you are a new trader who is not certain that you know how to trade independently, get off Twitter for 1 or 2 or 3 weeks and trade by yourself with your computer and your phone and on your own independently and see, can you make money doing that? If you can't, you most likely need to go back to the drawing board. Because most of us who have come up, like I started my Twitter just last year because I had a personal Twitter for, I don't know, forever. I've had a personal Twitter for like a decade plus. But like, I'd seen on my personal Twitter all the garbage that was being spewed on FinTwit and all the nonsense and misinformation. So I made a Twitter to try to somewhat correct that. Obviously, I'm not saying I'm the hero, but I'm saying that's what I tried to do. But the reality is most of us up here have been trading without Twitter for a long time. So we know how to trade because we've done it on our own. If you're a person who your entire trading journey started on Twitter and it's been on Twitter for the lifetime of your trading career, there's a high likelihood that you don't know how to trade without Twitter. And so find out if you can do that before you make the assessment or the self-assessment that you're a good trader. And that's not to knock anyone, right? I'm not saying that there are new traders that are better traders than I am. I'm not saying that if you're a new trader, you're automatically bad. But what I'm saying is do yourself the service of assessing on your own. Do I personally know how to trade on my own? That is a huge, like that's of categorical importance, in my opinion, to make that assessment on your own before you can go forward and feel like you have the knowledge or the wherewithal to make those assessments, especially if you're using Twitter as a scanner. So that's what I'll say in closing. I know that was a bit all over the place, but I've been dealing with a bank all day, so I'm a little out of touch with stocks today.
Yeah, me and you joked a little bit about the banks in the back when we were texting. I don't know who thought 9 to 5 when your job is working with business owners was a good time, but hey, here we are. 9 to 5 is bank hours, I guess. So,
Trying to make a meeting today.
but with that,
I was
yeah.
trying to make a meeting today, and I called them, and I was like, hey, so I trade every day. I trade till at least 3, and they were like, yeah, well, we close at 3:30, and I'm like, well, that's stupid, but yeah, no, I agree. Bank hours are terrible.
It's super interesting. I like to, me and my friend who just started at Chase actually
It
like
should
to
all
joke
be
about it a
online.
lot. He tries to defend it. Say that again?
It should all be online. You should just be able to send them your identification, get on a Zoom meeting on video, and do it there.
Or hop in the metaverse. But hey, that's a couple years out. I was just joking. Perfect though. Let's keep it moving. I'm gonna throw it over. Actually, Gavin's not up here anymore, but I guess this is a little bit of an opportunity to switch the tables. I hear he left to go buy AMC and Lucid go long them. But with that quick interjection, let's throw it over to Exclusive for a wrap up.
Yeah, I mean, what hasn't already been said, it's just like, okay, so I'm going through some DMs and I'm talking with some of my members, right? And I see, okay, I have an alert that was for a Q call at $1. It was the first trade of the day I took, and I was playing it to the upside before we get the gap, before we get the pullback, which almost always happens at the open. Very volatile. The calls are up 30, 35%. We take profit, and I'm saying this stuff live on voice, and I'm telling people, okay, we got 30%, take some off the table, and hold the rest until expiration if you can afford it. If not, take it off. On Fridays, I trade, with nothing but profit anyways from the week, so zero DTE expirations are on the options are extremely risky and volatile in the first place, but that's neither here nor there. So I'm talking with them after hours, and they're saying they're sending me a picture of their position that's lost all the money, and they're down $1,000 for the day because they put $1,000 into the account or into the trade. And I'm saying, well, we were up 30%. Why didn't you take any profit? I mean, even some, if you had, if you were able to make, $300, walk into the intersection and asking somebody that pulls up next to you, hey, can I have $300? If I give you, if I give you $1,000, can you give me back 1,300? You would take it, but because of the scenario of the market and the false belief that every trade is going to immediately profit and keep profiting and never stop profiting, because of the whole what Stock Talk Weekly was just talking about, the whole illusion of infinite profits. Although options have infinite profit, unless you're doing like a spread or something, your profits will be finite because of theta. Everything is timed. Options is just a bet against time to get to where you're thinking the price is going to go. So, it's really frustrating for me when I see someone that, and this happens, 10 to 50 times a day just through Twitter and Discord, the same thing when I try it doesn't matter how much you preach. If you're not willing to absorb the knowledge being given to you, whether it's for free or paid for, it's up to each individual investor to want to educate themselves, to want to take the recommendations, not financial advice, but just like the psychology and the risk management factors that go into every single trade that should go into every single trade. So that was just that's just one thing I wanted to address because it was on my mind and I was literally just talking about it. Um, Another thing that I would leave people with is, if you're in this part-time, meaning you have a full-time job or you're a student. I know traders as young as 14 years old, one of who is actually talking on Stock Talk Weekly's calls every now and then, and that kid's doing well. But you're if you're trying to be successful at trading and you're not able to put the time required into becoming successful at trading, it's going to be counterproductive if you're trying to day trade. Because in my opinion, a day trader needs the full, I would say at least, 8 to 12 hours of the day dedicated to just preparing mentally, executing a plan that's made pre-market, and recapping what you did through the day and finding out what you did right and what you did wrong and learning from it and growing from it. If you don't have that time that you can dedicate to trading, it's going to be, you can be successful. I'm not saying you can't, but it's going to be counterproductive because I can tell you from firsthand experience when I first started trading, I was still working and I was down 60% of my money that I invested, and I decided to take a step back and learn, for a couple months before I got back into the market. So just educate yourselves. It's the key to success. KEY. Keep educating yourself, and just don't go in with the thought that everything is going to automatically profit. Go in thinking I'm going to lose this trade off the bat, and you'll never spend too much money on a trade. As soon as you buy a trade and you're thinking, oh man, I don't know what I'm going to do, or is this trade going to go up? Is it going to stay red, or should I sell here? If you're thinking too much about it, you spend too much money. So just trade with less money. That's all I got, really.
Exclusive, you any plans for spaces or anything? Any week going live streams or anything pre-planned for next week? Where can we get more exclusives live?
I probably got one or two planned for next week. I know I'll be doing one with Wolf Financial, and I'll probably be doing one for Lotto Friday. Although it was pretty fun just doing it for my members, and I actually gave more than I normally do on the Spaces Live on Twitter. So it was kind of cool just spitting out almost every single trade I was taking versus just sending 5 or 10 of them. So that was a really rewarding day. I'm just like going through member gains and people on Twitter that were just following some of the charts that we posted, and it's really rewarding, and it's really fulfilling to me personally when we see other people succeeding. Because at the end of the day, although I run a business for it and the business is for a profit, I do it for free also to prove that just because people have a paid room doesn't mean that they don't care about the community. I think the majority of the people that have more free rooms that are pumping and dumping are the people that you should avoid. So that's it really. But I'll probably be doing one or two next week on Twitter.
Sorry, I had a cough there actually. Normally I blame it on just getting to the mute button, but for anyone, if you are interested in exclusive, what he's talking about, his membership, his class, the link is in his bio. It's in that link tree. Check it out. Definitely a big fan of his Twitter and all the free content he's putting out. So I can't imagine the levels that we're going to in the paid Discord. And quick thing with paid Discords or paid products in general, content creators, what you're doing is you're putting a lot of time and effort into doing this stuff and sharing it. For traders, some people might ask, well, if you're making so much money with trading, why are you doing this or whatever? But, the name of the game is really making money for what you're doing, and charging a fair product, charging an amazing service, and taking it to that next level, and getting another level of income, or another source of income that is more stable. I really think that, and I will stand by this. There are very, 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 very few people who your sole source of income should be through the stock market. Very, very few, if none. So I'll even go on a limb and say none. So for anyone thinking about that or wanting to say that, as long as the person is driving the value for what they're charging, which I know Exclusive does and a bunch of other people do, and Stock Talk Weekly will. I think there is absolutely no problem with charging an extra service a little bit on top of it. Not that I am ever going to do that, but just wanted to throw that out there. Big shout out to Exclusive. Make sure you're following him. Make sure you're following all the other speakers up here. And then last but certainly not least, do the wrap-ups and throw it over to Brad. If you want to throw another Michigan jab in there, we can accept it. I think this is the space for it.
No. I'll take the high road. I'll be. No. But I appreciate you being you giving me the opportunity to gloat a little bit. But you guys will probably beat us next year, so all good. But I pretty much said all I wanted to say. There was an interesting investor conference that GoodRx participated in this week, where the CFO told us that last year was a large revenue headwind for them because there was no cold and flu season, and prescription transaction volume kind of depends in the winter on cold and flu season, along with elective care. Both were pretty much halted, but that's been pretty normal, he said, so far this year, which is at least a $5 million revenue boost, and probably more because the segment's bigger than it was last year. So that was an interesting quote that if anyone cares about GoodRx, I found very encouraging. But in terms of everything else, tomorrow I'll post the news of the week for my 24 holdings, and then Sunday, GoodRx deep dive is coming out. So excited to publish that and to share that with everyone. It's been a long time coming. Been working on it for a while, and yeah, excited to share both of those. But thank you for having me. Stock Talk Weekly, congratulations on the new premium service. You share so much amazing information. I'm sure it's going to be an awesome product, but always enjoy hearing different perspectives from everyone else, and have a great weekend, and yeah, go blue.
Brad, where's the newsletter? Is it in your bio?
Yeah, it's just the link in my bio, stockmarketnerd.com, and that will take you to it. And thank you for letting me share that with the spaces.
Perfect. Make sure you check it out. You got something coming tomorrow, and you got another big thing on CrowdStrike, which I know actually someone already DM'd me asking about it. So I know people want it. But with that, we are at the end of the spaces. We went for about an hour and 45 minutes. FinTwit Friday. This was definitely a better week in the market than we've had over last week and maybe the week before that. So this was a great spaces as always. I love this. Big shout out to everyone who came in and listened. Big shout out to the speakers. Thank you guys for all coming in. Gav, is there anything you want to say at the end before we close it? Oh, perfect.
Yeah. I actually did want to say there's a very strong chance. First off, if anybody's unfamiliar, this is our sister space to our Monday space. So we have a Monday space at 9:20 a.m. EST. I'll probably have you host it, Evan, because my network is still pretty shoddy. However, there's a very strong chance that I'm going to get Twitter Spaces to tweet about that Monday space from their official account. I hope. I don't know. I'm going to chat with like a few people, trying to make it happen. If not this week, then the following week. But yeah, we're connected, and we're going to be really excited. Stocks Talk Weekly usually is on that space. Gerg's on that space. We'll have some other speakers on there. So Monday morning, 9:20 a.m. EST. It'll be a whole nother week in the market. We'll be attacking it. We'll be live trading, analysis, everything that you need to get you started. So know that is coming, and really enjoy your weekend.
Yep, super excited for that. Throwing this out there while you're having that conversation. I was trying to use an emote that really reflected how I felt right there. I didn't have one. So, hey, maybe we need like a fire emoji or something like that. But we're gonna that doesn't matter at this point. Thank you guys, everyone, for tuning in. We're excited to be back on Monday, and everyone have a great weekend.